Right, g'day, buddy miners. 24th of May, Wednesday. The week is flying, and we are going to cover, maybe for the last time, we're nearly hoping for the last time, because even we're getting sick of this deal, Trav. St Barbara have come back to Silver Lake Resources yesterday afternoon saying that they will not be engaging with them regarding their unconditional proposal, which heads towards the fact that at this stage, Genesis will be taking control of the Leonora assets unless some more wild twists and turns get put in with bigger deals and that force St Barbara's hand. Travis.
Hey, mate.
Mate.
I'm looking forward to some new news. Have we got another deal we can talk about?
Do you reckon everyone else is holding off on their own news, waiting for this to, because they don't want us to be consumed by this, and they want us to cover it?
I think so. I think if you were doing another deal, you would rightfully wait for this one to be over so that you knew we were going to talk about it.
Well, I've got good mail that Albemarle is actually waiting for this to conclude so we can start covering the Linetown takeover.
Yeah, I'm sure that you're the first person that they would call.
And now, speaking of mail, now we will go over why there was a comment in the AFR yesterday that David Baker from Baker Steel, who was one of the two major shareholders for St Barbara, the other shareholder is L1 Capital, which said in Silver Lake's announcement that they will be voting in favour of the Silver Lake deal. Okay, so now David Baker Steel wasn't included in this Silver Lake announcement, but yesterday in the Fin Review, David Baker was quoted saying that he was...
I got the exact quote here, Matty.
Well, I was going to paraphrase, but I reckon exact quote would probably be better.
The exact quote is great, I think. This is quoting David Baker, and this came out like not long after St Barbara announcement. It felt like an hour after. So it was
surprised you didn't ring us, Dave.
It was pretty orchestrated just from a rebuttal perspective, I thought, given the timing of the release. And so David Baker, quote, "The whole episode is very disappointing from a St Barbara shareholder perspective. Mr. Baker, who holds 8.25% of stock, knowing that Silver Lake had expressed interest prior, why didn't St Barbara engage with Silver Lake on the Genesis bid renegotiations to get some competitive tension? Now shareholders have been put in a difficult situation where timing and deadlines muddy the waters. Let's see how it plays out, but a lot of question marks over the board and management of St Barbara."
Okay, so this is following on from the comments in the St Barbara announcement yesterday titled "Correcting the Record," which is St Barbara's, probably the most direct language we've seen so far back towards Silver Lake. And they specifically said St Barbara confirms that Silver Lake first approached St Barbara in mid-2022 and subsequently in September 22 regarding an acquisition of St Barbara. So, and then in this time, they were in the discussions with, and it says in merger discussions with Genesis and Red 5.
It said three other companies, so there's another one too.
Yep. So,
and I wonder why they say mid-22, not actually naming a month there when they named September.
Yes, it was, that bit was a tad vague, but okay, so they've approached them. Now you've got the Hoover House deal happening, which included a no shop, no talk.
That was announced December.
Yeah,
yep.
So that's
announced December.
So they had opportunity before then to put a proposal in.
Yep. So they're saying Silver Lake made the first piece of communication with them September, and they should have provided a bid before December when the Hoover House transaction was announced.
Yep.
But they're basically saying there was no other kind of piece of communication that went in the opposite direction after December because they were bound by the exclusivity.
No shop, no talk. So if you look at that point saying, Silver Lake is saying St Barbara didn't let us in the door, whereas St Barbara is saying, well, Silver Lake did not provide an actual proposal, like an offer, for us to let them in the door. So that's the two arguments from both sides.
Mm.
You can argue who's right, who's wrong, but that is from what their opinion is from either party. So then, so now the Hoover House deal gets recut, which is the spin out of Phoenician Metals, Genesis taking majority control of the Leonora assets, and that was plenty going on in that one. Okay, fast forward, bit of a history recheck for everyone here. St Barbara go into more debt in potentially breaching their debt covenants, And there is...
Which is a breach of the CP on... it's actually a condition precedent of one of the scheme. So that they had a scheme implementation deed with Genesis, and this net debt threshold was actually going to result in a breach of that CP.
Okay, and now Genesis have said, right, we want the deal recut now. Now, I know you've posed the question, Trav, and this ties into the whole no shop, no talk thing. You've posed the question that, okay, when the deal was getting recut, why wasn't the phone picked up to Silver Lake to say, we're about to recut a deal?
Yeah.
Are you interested? Do you want to put an offer in?
Yeah, so this is in April.
Create some competitive tension.
Yeah, so we're talking April now. There's a trading halt because, behind the scenes, the deal's getting recut. Effectively, my question, and it looks like David Baker's as well by the looks of that quote in the AFR, my question is, at the point that the corporate deal ended, this, complicated bloody corporate merger and spin out an IPO, at the point where that ended and it became an asset transaction, why did Silver Lake not get a phone call to express, a value bid for the Leonora assets only, which is a completely, different transaction to a corporate deal. So before it was a corporate merger, this is a completely different transaction in my mind. And you could have had a better value outcome. You could have used the value indication from Silver Lake to play off Genesis and get, the best possible value outcome for St. Barbara shareholders at that point in time. Okay,
now the no shop, no talk, that is from the scheme related to the Hoover House side of things, that says, right, St. Barbara can't go and shop the deal out without someone else coming over. Someone else would have to provide a proposal, an offer for them to be able to shop it, because there's potential for a superior proposal.
Yeah, you can have deal protection as in, don't shop the deal, but you can't contract out your fiduciary obligation. So, in that case, it's sort of the onus is on someone else to come in over the top unsolicited.
Now, that no shop, no talk. So we've been given a bit of mail here, and we've got the proof of the mail, which is, geez, that's good for us, Trav. Now, the mail I've got is that St. Barbara, even during that recut stage, was still under the no shop, no talk obligation with Genesis, saying that even when that deal was getting recut, they couldn't shop the deal out. So, and an example of shopping the deal out would be picking up the phone and calling Silver Lake and saying, "What's your offer?" A verbal thing without them putting in a proposal. And I guess your question is then, well, why are they still bound to that no shop if the deal's getting recut? Mm-hmm. But we have then looked at the scheme
implementation deed that came out in December
for Hoover House.
And to be honest, we had to rely on some external legal advice. Thank you, Mr. Spector, for providing a perspective here, because...
A perspective.
A perspective. Highbrow laughs here, Matty. Yes. The way it's been relayed to us from, the point of view of a lawyer, is ultimately that when it looks like a CP in the scheme implementation deed is not going to be satisfied, then there is a consultation period on the failure of that condition precedent. You can actually see that in the scheme implementation deed section 3.7 there.
Yeah, so if you go into the announcement of merger of St. Barbara and Genesis to form Hoover House, if you go down to all the legal fine print that no one probably reads, section 3.7 talks about a breach of the condition precedent.
Which in this case was a net debt threshold,
Yeah, and then if you go down to failure to agree, it says...
there's essentially this consultation period where there's 5 business days where the parties can agree, need to come together and agree a recut deal effectively or along those lines, and during this process, they're sort of still bound by the exclusivity of the existing deal, and ultimately it kind of provides a bit of bloody protection for the incumbent.
Well, it's the benefit is towards the incumbent,
Yep.
which so the incumbent is Genesis. So they've got this 5 business days where they can have a point to recut the deal without St. Barbara being allowed to shop out the deal in absence of someone coming in with an actual non-binding proposal that would be possibly deemed superior. So I guess with all that information together, that satisfies and probably answers the question of David Baker that he had in the Fin review saying, why wasn't this put out to Silver Lake during this recut? I guess this section 3.7 and 3.8 in the initial scheme is why.
If I was David Baker, I'd still be bloody grumpy.
Oh, of course you would. Like, imagine how much he's bloody lost on St. Barbara. Shitloads.
Well, it's not just that, but it's like in the real world, the exclusivity parts are kind of, it's like, there are absolutely deals you can point to where, at this point where it looks like a deal is going to blow up, there are alternatives that happen. So I'd still be grumpy if I was David Baker because you get to this point and you're kind of looking around and you're thinking, I could have gotten a fair bit extra here, which heck. And
I suppose we're finding I guess the legal reasoning why this is the case. But there's not saying that there wasn't any other, not saying there's anything that happens on the street that where another offer could come in. But this is, I guess, the legal reasoning why that this is the case to answer that. So it's
Yeah, I'm keen to talk about some other stuff in the announcement that I thought was interesting, Matty. You keen to do that?
Especially from Chairman Kerry Gleeson. There was some sentences that stuck out to me. Silver Lake have waited till the 11th hour to do this.
That's a good one. I'll get to that. I will get to that. I'll start at the start and I'll just give some running commentary of some things that I thought were really interesting. I did notice in their calculations of premiums, they are referencing share price at a point in time, not a VWAP. Very interesting. And it's also referencing an intra-day share price in one of the premiums reference, but I've never seen a premium reference to an intra-day share price before. And I think what that does is it just paves a premium in a more favourable light than if you were to kind of do a VWAP. But a VWAP, is like, it's just a more, I guess, like I'd take honest way of presenting a premium. So
I suppose you can assume that St. Barbara are putting the premium wording the premium in a way that sells the Genesis deal best to their shareholders to say that this is why we are going with an offer that is not considered a premium on a value perspective.
It's framing things, right? And when you frame things, I think like when you engage in presenting data in a framed way, I often think sometimes the way that the thinking behind that data is often you have the answer in mind and then you're trying to find the data to support the answer rather than looking at the data objectively and making a decision.
I think that what we've learnt during this whole process, Trav, is that which share prices can be a wide range of share prices between intradays, VWAP, and when you take the VWAP can be used in so many different ways to form what this premium is, and there is no way to actually figure out what the exact premium is unless there's a bloody rule that is put out that says you have to use this, you have to use this calculation.
You should. I mean, it's like, a sophisticated investor knows to look for a VWAP premium. It's sort of, corporate finance 101 there.
But what period is the VWAP supposed to be over?
Oh, you should do a bunch. I mean, the right way to show a premium in a merger is like in reference to a few different VWAPs, and you should have some like level of knowledge of the volatility of that share price over time. And so, you just be a bit sophisticated about it. I'm sure in their internal docs they do all that sort of stuff, but this is just a public announcement where they're not showing it in that way. Anyway, I'll move on. I love the way that they title the two separate deals. So they give them these, so the binding Genesis transaction, and then when they talk about the Silver Lake one, it's, what do they call it? It's the revised non-binding indicative and conditional proposal. So it's,
Rosso didn't capitalise it.
Yeah. Well, they do. That's very funny. But I think it's like, they also call the the fully financed and shareholder supported Genesis transaction. So I think like this shareholder supported Genesis transaction. So there's this 49%, Genesis shareholder support. I've been thinking about that one a bit, like how it's a sophisticated argument to say that we're certain that we're almost certain that this Genesis shareholders are going to approve this transaction. We've got 49% indicative support. I think it's a little bit questionable putting out the 49% support but not naming those shareholders.
Are you supposed to name them?
I think you should. It's like anyone can just write a number, but yeah, I honestly think you should be naming them because your shareholders should be consenting to that. As far as, and when you saw Silver Lake do that whenever they used L1 and Baker Steel, albeit they weren't Silver Lake's shareholders, they were St. Barbara shareholders. But I don't think it's sort of I don't think you should be quoting a 49% shareholder support without naming because anyone can put out that number and not verify it.
Yeah.
I'm not saying it's not the right number, but I'm just saying they should name the shareholders. Okay, and then look. Let's keep going down to...
A big chunk of that shareholder is Raleigh as well.
Yeah, I mean, probably
assume so.
Probably AusSuper, et cetera, right? Oh, mate, here we go. I found this one really interesting. So they reference this quote that must have been on the proposal from Silver Lake. The lack of substance associated with the revised non-binding indicative and confidential proposal is also indicated by the fact that it is stated to express, in quotation marks, current intentions only and is not intended to constitute and does not constitute an offer capable of acceptance or otherwise give rise to a binding contract. Mate, that's just it's literally like a statement you have to put on every non-binding proposal from just like a legal stance. It's not like, it's like a
waste of ink, is it?
Well, it's like you just have to chuck it on there, right? But it's like they're pointing it out like it's this big thing. We've got doubts over the ability for this to become well, they're just pointing out the fact that it's not binding. But when you just cut and paste that sentence there, it's sort of making more prominent a really kind of like, it's just like a sentence you have to chuck on an MBIO from just like a legal protection perspective. But they're giving it prominence to sort of undermine its validity, I think. So I find that interesting. Oh, what have we got next, Maddie? So,
well, this was the one, I guess, Kerry Gleeson's comments, the St. Barbara chairman. So Silver Lake was given the opportunity to make a non-binding indicative offer in September last year and did not do so. Instead, Silver Lake has waited until the 11th hour to demand that St. Barbara entertain a disruptive and unrealistic 2-week due diligence exercise without any indication that Silver Lake shareholders will approve it. So I guess those words are disruptive and unrealistic.
11th hour is an interesting one, right? Because it was like from the outside, I didn't know that doing a deal on the Leonora assets only was possible until St. Barbara had recut the deal with Genesis in that way. That happened, from my memory, 11th of April. And when did they submit their bid? It was, it was bloody, I think it was only 11 days after that. So like 11 days after it becomes obvious you can do an asset deal, doesn't feel like an 11th hour. Doesn't feel like an 11th hour.
But I think
disruption to me.
Okay, so for rewind back to last year, Trav.
Yeah.
Why don't you think Silver Lake have put in a proposal? Because they even with the Hoover House thing still going on, couldn't have Silver Lake still put a proposal in to buy the Leonora assets?
They could have, but I think like it wasn't. I mean, like they probably are thinking it's not going to be a favourable transaction. Given the fact that it looks like they're going to do this corporate merger with one of Genesis or Red 5 or another company. So it probably looks to them like the real goal here is to have their cash flow issues absolved by the balance sheet of another company, and that solves some of the funding issues around their other assets. The recut basically just chucked a bunch of cash in to solve that problem.
Yeah.
But Yeah, maybe it was an option back then. I don't know. Like you could, maybe Silver Lake should have thought about it, to be honest, and just chuck a bunch of cash in. But there's obviously
Barbara is definitely standing behind the fact that Silver Lake did not put a proposal in at any time.
It's a worse tax outcome as well. Like when you just do the asset deal, you got to pay a bunch of tax rather than So it's just like it's an inefficient way to go about it. But yeah, I think that the total purchase price sort of came down as it became an asset deal as well. So yeah, it becomes more accretive in the process of doing it too.
Yep. And here's another one. Silver Lake had, and we went over it before, first approach in mid-2022 and September 22. We don't know what month this mid was regarding acquisition of St. Barbara. And then they also say Silver Lake had ample opportunity between September and December and in the ensuing period to make a non-binding indicative proposal that would be capable of being considered with over more realistic timeframes. Instead, Silver Lake waited almost 5 months until 28th of April to make its first non-binding indicative and conditional proposal. So it's, again, standing behind the fact that I guess Silver Lake didn't put an actual proposal in, but I guess it doesn't.
They basically, like when I read that one, it does ignore, what could have happened. What could have happened in terms of just attracting further interest from Silver Lake at the point where it became an asset deal. I mean, we talked about the limitations in that in relation to, some of the logic in the scheme implementation deed, maybe, flowing through into a consultation period, and which gave a benefit to the incumbent.
Oh, I'll give you the next point, Trav.
I found this one interesting, right? So the board's conclusion was that it was unable to identify a realistic pathway by which the revised non-binding indicative and conditional proposal can reasonably be expected to become a superior proposal. Unable to identify a realistic pathway. I mean, a realistic pathway. I mean, I think we could map out a realistic pathway by which that could happen. It's just, you're accepting risk in that equation. So I think what they're really saying is that the risk that you have to take on in order for this to actually deliver greater returns to our shareholders is too much risk that we're willing to take.
And that risk doesn't outweigh the premium, however you want to calculate that premium based on whatever share price.
10% they call it, right? But
we called it 11, so they're nearly spot on.
In reference to an intra-day share price. Anyway, it's funny, right? Like 10%, mate. Like if you're a fund manager and you're compounding money at 10% every year, you're killing it. Like that's a great return. I don't think we should play down the fact that it's only a 10% premium. Like it just doesn't pass it doesn't pass the meter for me for kind of playing down the premium immateriality. I think you can talk to the real risks around the conditionality, and that's okay. But we've got that bit from Jonas sort of saying, you should be jumping over the table, grabbing their shirts for that extra 10%, So I think that's a valid perspective Jonas had on that one. Because if you're a shareholder, you want every last bloody bit out of it. If you were selling your house, Matty, and you could get 10% more, would you take it, wouldn't you?
Yeah, but but then I look at it from the fact also, yes, I'd take 10% more, but I'm like, am I in risk of
the deal
going bankrupt if I...
No, not you. Oh, you going bankrupt.
Yeah, so if I had some personal loan issues that I had to sort out, but I'm like, I could get 10% more, but I could sort them out now. Say the mafia was after me or something. There is that side. But
what if the other person you could do the deal with had a bunch of other houses, so it looked like they were good for it, but they didn't have but the bank just had to take a look at the house to give them the funding in order to get the deal done, and it would take a little bit longer.
I would explore it.
You'd explore it, yeah, okay,
Yes.
Yeah, and you'd explore it at the risk of
they might hit me up for a job after this.
Yeah, and you'd explore it at the risk of the other deal falling over.
Geez, we're getting into virgin territory here.
I think it's an interesting hypothetical, right? It's a relatable thing.
Interesting.
Yeah.
And whether your and I views are probably different. Whereas I look at if I weigh up the risk and the Leonora risk of this whole thing working, the risk of this timeline, and the way this has panned out, I go with the current St Barbara decision, to be honest, in terms of a plan on how Leonora is going to work for the pro forma value of the shares, because there's a plan. But that's the thing. I don't know what Silver Lake's plan was. It wasn't disclosed. They might have had another plan to make Gwalia and Leonora work. So if I weigh up all the risk, I guess where I'm sitting is that I would go with the integrated model of Genesis and having that potentially work.
Yeah.
That's my stand. You're probably I think you might be on the other side of the fence.
Well, I just think and I identify a realistic pathway. I still kind of come back to the whole...
But is that the pathway of the deal or how the pro forma is going to work?
Well, it's basically saying we don't let you in the door because there's no way that this proposal can actually become superior. Yeah. I still think, what's the risk equation for St Barbara by just letting them do DD? Not much.
There is the performance right premium.
Yeah, but the DD finishes before the vote.
Yeah, true. So you could still let it go in parallel, couldn't you?
Yeah.
Yeah.
Exactly.
And then it gives either the potential for a better deal to come, and if it doesn't come in time, and as we talked about on Monday, the pressure is on Silver Lake to get it done within that 2-week period.
Yeah.
So it's on them. So yeah, if putting it that way, yes, I would lean towards letting the DD happen, and if they don't get it in, and if they put the bid in, they can still go with the Genesis one anyway, whether if they get crucified by the shareholders or not.
Yeah.
They can still go with it.
Yeah, it's kind of like, when I think of it that way, it's kind of like, if we let you do DD, there's a risk that our shareholders could get really grumpy and that they might not vote through the Genesis transaction. And if they do that, then the Silver Lake one's not sure. We're not sure that could actually happen because there's these conditions about it. It's almost like not trusting your own shareholders to make the right decision with more information available to them.
But I think based on the fact that their shareholders are probably very grumpy already based on what St Barbara have done, so they wouldn't, and they probably
their job is to do what's best for this. It's interesting. It's an interesting thought process to sort of think about, not wanting your shareholders to vote down something. Yeah, but it's your shareholders that are choosing that, and you're the board of representing the shareholders.
Even when it's all set in stone, Trav, we're still pumping the hypotheticals. It's that's what keeps money of mine going, Cobber.
It's the thought process is really intriguing, right? Yeah. A significant. Oh, here we go. Another one. It will be a significant risk to require further funding. So talking about Silver Lake having a significant risk to require further funding. I think that whole they make this point about Silver Lake potentially requiring further funding, but they also create that narrative of what Silver Lake's share price has done, and that's sort of being illustrative that the market doesn't want it, etc. And I sort of think those 2 points sort of answer each other, because if they required further funding, I think the share price goes down because maybe the market's pricing in a future equity raising.
So St Barbara are dismissing this Taurus facility. Silver Lake were very strong saying we've got a debt facility with Taurus, we're fully funded for it, whereas St Barbara is saying they are not fully funded based on the due diligence that Taurus have to do. Is that right? They're not fully funded because the Taurus required to do DD, correct? But they are once they get that DD tick, they've got ample cash and debt to make the acquisition. Look, I thought this sentence was really interesting, Maddie. Should St Barbara lose the binding Genesis transaction, either as a result of disruption to the shareholder meeting or undue delay resulting from the distraction of St Barbara engaging with Silver Lake? So it's coming down to that, like we spoke about. They're really kind of talking about we're not gonna allow DD because at the risk it could
we could lose the Genesis transaction as a result of disruption to the shareholder meeting. How does that work? How do you get disruption to the shareholder meeting? I think, let's think that one through. How do you lose the Genesis transaction due to disruption to the shareholder meeting? It's sort of like, I think it's kind of what they mean by that is like the noise and the all of the media and the potential shareholder support for a different proposal could result in the Genesis transaction being voted down. So it's that sort of argument of like, we trust ourselves to know what's best instead of the shareholders to know what's best.
And this comes back to your point where they haven't got faith in what their shareholders are going to vote for. Possibly that they're disgruntled.
It's a bold perspective. They do have more information than their shareholders, like by virtue of the fact that they've got access to a bunch more. Yeah, all of Genesis's private stuff and all of St. Barbara's private stuff. Right? They've got. Yeah, the info to make a better decision, but it's an interesting kind of view of a board, I think, nonetheless. Or undue delay resulting from the distraction of St. Barbara engaging with Silver Lake. Undue delay. So how can you lose the Genesis transaction as a result of undue delay from the distraction of St. Barbara engaging with Silver Lake?
Well, the thing they'd lose would be the performance rights getting converted into shares, but they wouldn't lose the transaction.
Yeah. Yeah. Well, I mean, there's still a vote. So it's like undue delay.
But wouldn't they, if that timeline played out and what would happen then if the Silver Lake deal, the Silver Lake DD takes it all past that July 1st, whether that's the performance rights not being converted into shares, but then the fact that, say that DD period is going and then the shareholder vote is happening. So that's saying that the only way that the Silver Lake DD would then, that binding offer that would come out of that would get accepted is that the shareholder vote would have to vote against the Genesis deal. Because that vote is penciled in for that, I think it was June 20. That vote would have to be voted against for then. That's the only way the Silver Lake deal would have got over, wouldn't it? Yeah, well,
I mean, it's interesting. I think it's sort of like, I think it comes down to the capital raising piece in some ways. Like what, like we know that there's this, $400 million capital raising and it's conditional. It's a conditional placement, but I don't know what the terms of the conditional placement are. So I think the real risk that they're probably speaking to there is that, something stretches out the process that this conditional equity is no longer in place anymore, and we'd actually have to go back and refirm it all up, and share prices and the macro environment's different, so maybe it's not as doable. But I still think, to your point on the DD thing, couldn't you agree to due diligence on the condition that it is completed within 2 weeks, and that's firm? And then if it's not completed in 2 weeks, no deal.
Yeah.
Is that I'm not a lawyer, but how do you do that?
Well, that's the way I'll read that. That is saying that
DD would probably go longer.
If they engage Silver Lake and the DD is still ongoing while the shareholder meeting is happening, then shareholders are going to be like, well, I'm going to not vote in favour of Genesis because I want to see what Silver Lake come out with. So that's how I read that disruption. But as you said, there should be a period put on that. Like if you haven't got DD done before the shareholder meeting and an offer submitted, it won't be considered. Can you do that?
I would have thought so. Yeah, you set the parameters of DD that, agree to the parameters of a due diligence period that could actually result in a realistic pathway to this becoming a superior proposal. And I think that's kind of your way through if you wanted to open the door.
Yeah.
Really interesting one, mate. I think the takeaway is it's pretty hard from here for Silver Lake to create an outcome. I think it's and you can see that their probable strategy is the sort of the shareholder rallying the shareholders. So they talk about L1 there. Baker Steel come out with a statement in the AFR about an hour after, probably not a coincidence. I don't know about their realistic probability of getting more shareholders to really speak up and create noise. And if they can't meaningfully move the dial there, then I'm not sure they've got, much left that they can really do on this front. I mean, there are other alternatives with the shareholders. They could buy shares themselves. They could see if L1 will do the 249D, but it's just creates more noise.
But as one of those shareholders, would you vote against the Genesis deal, knowing that, okay, based on the timeline, if you vote against it, Silver Lake is still doing potentially doing DD. Like hypothetically, say the binding offer was not in yet, and Genesis gets voted against and are out of the race, and then Silver Lake then drop.
Yeah,
their
like
price.
in this situation, if there's no if there's no change between now and a vote, and if I was a St. Barbara shareholder, I would vote for the Genesis deal.
Yeah. Because if Genesis, if that deal gets voted against, then that is Genesis then have the right to pull out, wouldn't they? Without.
Yeah, it's a condition. It's a condition that it requires approval. So it's,
so if it gets approved against it, they're waiting on a binding offer from Silver Lake. Silver Lake then aren't competing against Genesis at all, and they could their binding offer could come in lower.
Potentially, yeah.
So I guess that's in favour of why the safe bet.
Maybe it's a condition breach again where you have that 5-day consultation period again, mate. I don't know.
God, we'll be working at bloody lab and legal before we know it, Trav, with this sort of knowledge.
I think
we've flogged this horse to death, haven't we?
Big time.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.